I wanted to put together this quick little video on an article from Calculated Risk, Bill McBride over at Calculated Risk that he put out in November 21. And the reason I mention this is that he hit the nail right on the head. And from a background perspective, we really want to see what has been accurate as far as forecasting the real estate market and what has been inaccurate, because it's very clear that there is no 50% drop in interest rate, or excuse me, 50% drop in real estate prices. All that hyperbole that had come out is just, it's not accurate at all at this point. So we want to go back and focus on what is accurate, what has been accurate, so that we create a nice background, a nice framework for what's going to work going forward. So yeah, things will change, and as the market changes, we're going to change with it and watch the evolution of the real estate market as we go through this interest rate shock. And so far, it's been a very interesting response in the real estate market to the interest rate shock. And basically, we had an initial drop carried into January of 2023, very clearly bottomed in January 2023. And we have come all the way back. And in many cases, at least here in the greater Seattle area, we've surpassed last June's real estate prices, gone to new highs. So clearly, the total collapse of the real estate market is not accurate. Why is it not accurate? Because inventory is so tight. On other stuff, other materials that I've sent out to brokers and realtors and clients, we've gone over this very, very, very closely. And so I just want to present some of these ideas that came from Bill McBride back in November 2021, because they are spot on accurate, they are correct. And what we're going to do moving forward is use this article as basically background information, so you can link to it, and with some of the daily reports that I'll be putting out. So we'll have a link to this video going forward. So without any further ado, here we go. This is Inventory Will Tell the Tale from Calculated Risk from November 10th, 2021. And he says, we're being flooded with housing stories. Will housing prices decline? Will they rise? Will price growth just slow? Does the U.S. have a housing shortage? If mortgage rates rise to 4%, will that halt the housing market? As Ivy Zelman said on CNBC. Although my crystal ball is cloudy at this point, remember this November 2021, I believe inventory will tell the tale. That's why I watch inventory very closely, not just the monthly existing home sales report from the National Association of Realtors and the monthly new home sales report from the Census Bureau. I also use weekly data from Altos Research. See Altos Mike Simonson's weekly presentation on YouTube. And I track inventory and sales for 30 plus local markets each week. Here are a few examples of when inventory helped me call some turning points. Starting in January 2005, I was very bearish on housing, but I wasn't sure when the market would turn. Speculative bubbles can go on and on. However, the increase in inventory in late 2005, see the red arrow on the graph below, helped me call the top for house prices in 2006. And you can see the arrow here as housing inventory started to rise. Several years later, in early 2012, when people were still bearish on housing, the plunge in inventory in 2011 helped me call the bottom for housing prices in early 2012. And we could see that here with the blue arrow. And over 3 years ago, in January of 2018, I was quoted in a Bloomberg article that included a bearish outlook for housing. I disagreed, and the steady level of inventory helped. And in 2018, I disagreed with Professor Schiller. A comment on Professor Schiller's housing boom is already gigantic. How long can it last? My conclusion? It's no big deal and definitely not a gigantic boom in housing prices. In 2019, when several commentators were bearish on housing, I pointed out that there was no sharp increase in housing inventory, and that was one of the reasons why I remained optimistic on housing and the economy. And the sharp decline in inventory during the pandemic phase was an indicator that price appreciation would increase. Inventory declined due to a combination of potential sellers keeping their properties off the market during the pandemic and a pickup in buying due to record low mortgage rates, a move away from multifamily rentals, and strong second home buying. At the same time, demographics were favorable for home buying. It's possible that rising mortgage rates will slow the housing market, or a sharp decline in some of the more speculative investment sectors might spill over into housing, or the Fed might raise rates due to the recent pickup in inflation. My spidey senses are tingling, however, it isn't obvious why this time or what the outcome will be. But I believe one thing is certain: inventory will tell the tale. And that's a theme that has carried over successfully to current inventory levels and the current tale of the real estate market. So I want to provide you some background, and thank you for watching. Have a good day.